This program is brought to you by Real Estimate, Australia's #1 property value estimate. Get your real estimate today on realestate.com.au.
It is good to have your company here on Business Now. Let's take you around the country and look at the health of our home auction markets nationally. There were 1,575 auctions across the weekend. You can see there the clearance rate was 61.1%. In Sydney, 697 auctions, down just on the past week or so, but just over 60% of those were sold. In Melbourne, fewer auctions still, 505. 2/3 of those were sold. In Brisbane, just 49 auctions, but close on 70% of them were cleared. In Adelaide, just 30 auctions. You can see there it's strong still, 83.3%. In the ACT, 52 auctions, a clearance rate again strong, 71.2%. And in WA, just 9 auctions, but there are almost 600 private sales. So let's bring in here Eleanor, Creagh, Senior Economist at REA Group. Eleanor, always good to have you in the program. I want to go to the health, the strength of the markets. Now people are suggesting interest rate cuts might be further off. It doesn't seem to really be dampening the demand for properties if they're out there.
No, look, that's exactly right. And I think it's a little bit of the same case as what we saw last year. I mean, interest rate cuts were not on the horizon last year, but we really saw that improvement in conditions on the ground, and that certainly continued into this year. And it's really all about that fundamental demand-supply imbalance, I think, whereby we've got housing demand buoyed by strong population growth, tight rental markets, those home equity gains of recent years, of course, which are insulating those existing homeowners from the impact of higher interest rates to a degree, and all of those factors are contributing or facing into what is a really tight supply of property.
So let's go to that side, because it's the area you've always got to concentrate on. Builders say they don't want to build if there's no profit, or if the risk is too great for them to go and commit to building. You can see this even in your capital cities right now. There's no cranes around the place. They're all starting to come off completed buildings. So this is one of the keys to the whole property market right now.
Yeah, I mean, that's exactly right. We know we've seen this slowdown in the delivery of new builds, which is hampering the supply of new housing, but also approvals are at decade lows. So approvals at the lowest levels since April 2012. And that's whilst we're facing into this critical housing shortage, really. So higher financing costs, higher materials costs, shortages of labour, higher labour costs.
So that increases risk, doesn't it?
Exactly. And I think developers just can't make these projects stack up. They can't make them meet their internal rate of return hurdles, and if the project can't meet the return hurdle, it can't go ahead, right?
Which means there's a lack of housing, which means that the problem goes on, as you say, especially with ongoing rising migration, looking for homes, which is pushing up rents, but there's no supply side. At some point, there will be a trigger at which there will be a flood of new approvals and new building that takes place, but that doesn't happen overnight.
Exactly right. And we've really seen that the supply side of the housing market has been incredibly slow to respond. And it's really the answer here for both the rental market and the market for existing homes. So that tight supply environment is flowing through into both those markets in terms of continued home price rises in the market to buy and rental price pressures. We've got rental vacancy rates sitting at just 1.11%. So pretty much crisis levels, 55% lower than pre-pandemic levels.
So therefore, go to the property investor, not the big builders, but the property investor, who you see a lot more of this now. People buying homes, doing them up, flipping them, or buying them, really putting tenants in there and milking the return. If they can get their finance and they can get it at the right price, it basically makes that stack up for individuals and maybe people with super funds.
I mean, we certainly know that investor activity has increased. We've seen a pretty large uplift in the past quarter with respect to investor inquiry on properties listed for sale on realestate.com.au. We've also seen that reflected in the ABS new lending data, which is, I guess, what you call the hard data or the source of truth in the fact that investor activity is up over the past year.
All right, because those numbers we just showed, most of that will be investors. Not a whole bunch of that is going to be first home buyers. It may be some people upgrading homes, but the vast majority of that now is going to be investors looking for opportunity.
So we do know that investors are taking up an increasing share of new lending, but actually, interestingly, first home buyer activity is also holding quite steady, a little above decade average levels. Now, I think a lot of that is due to those incredibly tight conditions in the rental market, possibly pushing people sooner than they otherwise would have in the market to buy, given that, rental market conditions are so challenging. Rental prices have increased quite so sharply. And I think a lot of people are valuing the security that their own home offers them, even if they might be spending a little bit more on their mortgage. Yes, that's so true.
Tell you what, it's always good to have in the program. Thank you for that insight. And those first home buyers, clearly that's the maths that they're always doing in their heads. Many thanks, Eleanor.
Thanks for having me.